Welcome to today's market report. European stock markets weakened today, with investors fretting about the increasing number of coronavirus cases worldwide, amid fears this will lead to the reintroduction of generalized lockdown measures. The DAX in Germany traded 0.8% lower, and CAC 40 fell 0.6%. UK's FTSE index was down 0.7%. Stocks in Europe have rallied hard since hitting a low in March, with gains driven by fiscal and central bank stimulus around the globe and a gradual easing of restrictions. The UK announced a major relaxation of restrictions on its crucial service sector on Tuesday. However, fears are mounting that the removal of those restrictions may have come too quickly and a second wave of the COVID-19 virus is on its way. German Health Minister Jens Spahn on Wednesday stressed that the coronavirus remains a risk after the western German state of North Rhine-Westphalia on Tuesday put two municipalities back into lockdown following an outbreak at a meat packing plant. Still, there remains some optimism about the economic recovery, particularly after Tuesday's upbeat business surveys, with France a standout, as lockdown loosening there led to a modest return to growth. To some extent, this is obviously a technical rebound. The fact that PMIs are still in contractionary territory illustrates the two messages: a sense of relief that a sharp rebound is possible, but at the same time, caution against too much optimism, said analysts at ING in a research note. The key economic indicator due for release today will be the influential German IFO Business Climate Survey for June, which seen recovery. The French index for business confidence surged 18 points to 78 early today, the sharpest increase on record, statistics agency NYSE said. Dufry stock climbed 1.5% after the Swiss-based travel retailer said it would slash staffing costs to reflect previously forecast hefty potential sales declines on the back of the coronavirus pandemic. Atos stock climbed 0.8% after the French information technology company confirmed its goal for 2020 while maintaining its dividend. Nokia stock climbed 0.5% after the Finnish telecom equipment maker announced its new chief executive, Pekka Lundmark, will join the company on August 1st, a month earlier than planned. Oil edged higher on Wednesday, consolidating after losses caused by a second consecutive week of increases in U.S. crude supplies. On the FX front, sterling has struggled to post gains against the dollar amid worries that the UK government is opening up the economy too quickly. On Tuesday, Prime Minister Boris Johnson announced that pubs, restaurants, cinemas and hairdressers in England will be able to reopen from 4th of July. The four countries that make up the United Kingdom are regulated separately when it comes to health matters. However, both governments' chief scientific advisor, Sir Patrick Vallance, and the Chief Medical Officer for England, Professor Chris Whitty, stressed Mr Johnson's plan was not risk-free. Additionally, a number of influential health leaders have signed an open letter published in the British Medical Journal Wednesday, warning that the UK runs a real risk of a second wave of coronavirus. GBPUSD was down 0.1% to 124.90. The cable pair recently surged to the highest since 18th of June, but failed to keep the gains amid doubts over the easing of UK's coronavirus lockdown restrictions. Also weighing on the pair are worries over the next week's key Brexit talks, as well as the US dollar's recovery moves. Euro-dollar is expected to keep the consolidative stance unchanged in the next weeks. The euro is expected to strengthen yesterday, but war of the view of 113.30 is unlikely to come into the picture, according to FX strategists. EUR sold to an overnight high of 113.48 before easing off quickly. While upward pressure was eased somewhat, it is too soon to expect a sustained pullback. The current movement is viewed as part of the consolidation phase, and for today, EUR is likely to trade between 112.70 and 113.50. The dollar weakened in early European trade today, with traders seeking riskier currencies, latching more onto the signs of economic growth rather than the increasing number of coronavirus cases. The dollar index was down 0.1% at 96.595 from a high of 97.719 at the start of the week. This is today's market news. Thanks for listening. We'll see you next time.